All right, cool. So now that we went over market structure, the next thing we need to go over is what a break of structure is. Before I show you what a break of structure is, I'm just going to tell you obviously what it is and what it indicates. So a break of structure is just a shift in market structure. So remember how we talked about what a bearish trend was, like lower low, lower high, lower low, lower high, lower low, right? This bearish trend, a break of structure is when price comes above. Obviously, this is in a bearish context. So once we have a bearish trend and then we have a break above, how is my? When we have a break above the lower high, that is considered a break of structure to the upside. Reason being is that we were in a downtrend and now we broke above this high, indicating that now we may even reverse and start creating an uptrend. Same thing for a bullish trend. So if I get rid of this, maybe I shouldn't have done that, but it is cool. So bullish trend, higher highs, higher low, higher high, higher low, higher high. And then let's say price comes down below the higher low. That is a break of structure to the downside, indicating that we may even look for further. We may come down and start trending bearish instead of bullish. So remember how here we had higher highs, higher lows, higher high, higher low, higher high, and then now a lower low. That indicates that, okay, now that we brought structure to the downside from here, we may continue a bearish trend to the downside. So instead of higher highs, higher lows, and then a high, lower low, lower high, lower low, lower high, lower low. And if you watched the last video, you would know how to determine where a high is and where a low is. So again, remember, for a high, it's one up candle and then a down candle, and then for a low, it's one down candle and then an up candle. So we can go on to the 1 minute time frame here. I'm just gonna move my phone. Cool. So we can watch live price action right here actually. We watch it, not even watch it, we'll focus within this area. Even though price looks like it's just consolidating. Cool. So within this area we have a high right here. As you can see, we came up, creating the high, came down, creating a low, went back up, create candle close above this high, creating a break of structure. So this, I want to just change this green line to red. So this green line indicates a break of structure to the upside, indicating that we may look, price might head a bit higher up. Cool. Now that you've understood that with the bullish trends and stuff, look what we have here, a break of structure to the downside. So as you can see, price, if you continue from last time, high, high low, higher high, higher low, higher high, lower low. Reason we, oh, I should like, I want to just draw like this, like, anyways, I'm not gonna complicate it. So, we have high, higher low, high, higher low, high, lower low. Once price candle closes below a higher low, that is a break of structure to the downside. So when this candle closed below this low, higher low, sorry, this is a break of structure to the downside, and then you could anticipate that we're going to head lower, as you can see to my right, like in this area. So if I get rid of this, I can find it in a bearish context. I mean, this might be good. So here, as you can see, remember what we talked about before. High, higher low, high, higher low. Oh, high, higher low, higher high, lower low. Notice how price, like if I just gonna move this for a second. Notice how price came below this higher low. That is a breaker structure to the downside, indicating that we may look for, not look for, but indicating that price may come down a bit further down. And we're shifting market structure. So we were once bullish within this area, but because of this breaker structure to the downside within here, we can anticipate that price wants to head lower. And it's very essential that you make sure that once you got a high, the candle that breaks it is a body close. So what I mean by body close is, for example, you see this high right here, and you see this big blue candle that closes above this high, this blue wick, well, blue body wick right here. That is a breaker structure to the downside, just because it candle close. Even here, candle close to the downside, that's a breaker structure to the downside. Here, it candle closed again to the downside below this low. Down here again, candle closed below this low to the downside. Another low here again. Like, you kind of get the point. And then over here, it breaks structure to the upside from this high. Because remember what we said, blue candle up, black candle down. So this is your high. So it brought structure to the upside with this candle. So if I can move this right here, so black candle, blue candle, this is your low right here, and we candle close below it. We have a high right here. Did you see price candle close over it? No. So we move it to the next high, which was here. Price candle closed above that one. And I could just keep doing this like over and over again. Like this, it would be good practice if you keep doing this over and over again. But yeah, a breaker structure literally just indicates like a shift in market structure. And it's very, very, very essential that you understand what a breaker structure is, because we'll be going over how to throw that into a strategy. Okay, cool. Perfect. And I can go on a higher time frame. It's very easier to see on a higher time frame. So let's say I've been on to the daily. Cool. Remember what we said for a low: black candle up, blue candle down. So this is your low right here. But what happens? Price comes up, down, well, comes up here, down, down, then blue candle up. So this is your new low right here. And that's where price actually breaks structure from to the downside. And if you're waiting for a breaker structure to the upside, we have a blue candle up, black candle down. So this is the high that you'd be waiting for a breaker structure from. So you'd wait for a candle close above this red line. Right here. With a black wick candle down, blue candle up, this is your low. Same thing over here. Black candle down, blue candle up, this is your low. Black candle down, blue candle up. This would be your low. And then you can just keep doing this over and over and over again. So yeah, as you can see, for example, I can tell you, like, the higher the time frame, the more impact the breaker structure has. So for example, let's say I'm on the 4 hour, yeah, and we break structure to the downside right here. We put like I'm gonna leave it. So this red line indicates a breaker structure to the downside on the 4 hour time frame. Just remember that a second. So if I jump onto, let's say, the 5 minute time frame. And we'll just look for a breaker structure to the upside. I don't think there is actually even. So if we cannot close here. Okay, cool. We broke structure to the upside from this 5 minute high right here. Oops, second frame, drag it. We broke structure to the upside from this 5 minute high on the with the orange line. Notice how like it broke structure, but it doesn't mean anything. because the 4 hour time frame, like, it holds a lot more power than the 5 minute. So this will make a lot more sense, obviously, when we go to like a daily bias and stuff, and you'll understand why I only like taking trades that are based off like going with the trend, because this 5 minute breaker structure to the upside was just a retracement on a higher time frame. So if I go into the 15, no, not the 15, let's go on the hourly time frame. On the hourly, you could say we broke structure to the downside right here. And let's say we were looking at price on the 1 minute. Let's say we were just looking for a 1 minute breaker structure. So we would have candle closed somewhere like around here. Cool. So we broke structure to the upside on the 1 minute right here, candle close. And if you don't know already, this is a long tool, which means you're buying. And let's say you had your stop loss literally like at the low, like even here. Obviously, I'm going to teach you what spread means, but even though this didn't tap the stop loss, you still would have got tagged out. If you were with 8 cap, you already know the game. But look, all this push up is just a retracement. And then the expansion move down is this. Because that 1 hour, remember, was bearish. It was not bullish. So looking for longs when the higher time frame is saying we're going down is like very... I'm not going to say... Yeah, it's dumb. I didn't want to say dumb, but it's dumb. But yeah. So I'll do this drawing again. So we went on the charts. We can even do... We can go back to the lines, to be honest. And this will help you determine to like obviously a bullish trend as well. So, or a bearish trend, sorry. So if I get my drawing tool, let me start over here because anyway I can shift it to bullish. We'll focus within, let's say, this area. So we broke structure to the downside here. Broke structure to the down. I'm not gonna count this. Broke structure to the upside right here. Back to the downside right here. To the downside again right here. To the upside right here. Upside again right here. Again slightly to the upside right here again. Lower low. Broke structure to the downside right here. And if I draw this thing again, so this. Actually, there's no point in me drawing. That's market structure. We already went through that. Sorry, but yeah, that's for a bearish break of structure. A bullish one would look something like this. So we have, well, this would be a higher high, higher low, lower high, lower low, and then this point right here is above this point, so this would be a breaker structure. Price candle close above this point, so this would be a breaker structure to the upside, indicating that we're no longer bearish, but now we're bullish because we switched structure. Again, here it's notified here, breaker structure to the upside, breaker structure to the upside, breaker structure to the upside, and then we switch bearish right up here. So now we're having a good bullish trend. We're only looking for buyers, and then boom, breaker structure to the downside, breaker structure to the downside, breaker structure to the downside, 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 downside. So you can kind of see like where price is. No one can predict where price is gonna go, but you're able to like more anticipate where price is gonna go with a break of structure. This is also one of our confluences, so you'd need to read. If you don't understand this video, you'd need to just watch it again, or just let me know in the Discord and I can go over it. But this is one of our confluences to enter a trade, so you need to like really pay attention to this. If I go on the 15-minute time frame with the candles, I'm gonna need my candles back. I almost pressed the wrong one. So again, remember, down candle is black, then up, black, then blue. So this is your breaker structure to the downside. Is this a low? No. This a low? No. This a low? Black candle, blue candle? Yes. Do we create a new low before this one? No. So this is the break. This is the a low we want to wait for price to break structure from. Do we do that? No. Instead, we formed a new low right here. Did we create a new low before breaking structure this one? Yes. We thought this low, black candle down, blue candle up. This one again with a new low. Why? Black candle down, blue candle up. And then this is where we actually brought structure from to the downside. And as you can see, we candle close, gives some sort of reaction, comes up. Remember, this is only a retracement on the lower time frame, and then initially just comes back down. Even here with the highs. So let's just restart. So blue candle up, blue candle up, black candle down. This is your high. Blue candle up, black candle down. This is your high. Do we form another one? Yep. Right here. Blue candle up, black candle down. That's your high. Blue candle up, black candle down. This is your high. And then if you need to help with it, literally just keep practicing like over and over again, like with these two candles. Blue candle up, black candle down. That's your high. Blue candle up, black candle down, that's your high. Black candle above this one, is this a high? No, so we're going to leave that alone. Black candle up, black candle down. Black candle up. Blue candle up, black candle down, that's your high. Blue candle up, black candle down, that's your new high right here. That's how you wait for a break of structure and how you determine highs and lows. Again, the way you'd act off it is, and let's say this is the only time you can really, actually no, let's not talk about how to enter a trade off this. That's more in the future. So again, I'm just going to draw it again basic. So lower low, lower high, lower low, lower high, lower low, high, break of structure, higher low, higher high. That's how you tend to kind of see price move. And hopefully you kind of really seen that in my explanation. I'm not going to change that because it's going to change the whole color. But I'm going to try and draw over it. Wait, I might have even clicked it. This is what a breaker structure looks like. When a trending market is in the bearish and then switches bullish. Same thing for bearish to bullish as well. So, bullish to bearish. So higher high, high low, higher high, high low, higher high, lower low, lower high, lower low, lower high, lower low. Price broke structure to the downside here, downside here, downside here. But we broke structure to the upside before obviously the downside here and above here. And just to like cover up any quick questions that I think people may have, let me just quickly, I need to, there we go. Change it to orange as well. So these indicate break structure to the upside. These ones, I'm just going to change like two of them because to the downside. Okay, cool. So people would probably say, oh, maybe say we have a low here and this wick came through it. This is not a break of structure to the downside. It has to candle close below this low for it to be an official break of structure to the downside. As you can see, we wicked it, which was a liquidity sweep, and I'll touch on that later on in the video. I'm not going to go over that in this one. Again here, let me see, for a bullish one, we were wick past it. We didn't break above this high, so there's no indication that we may switch trends from bearish to bullish. We wick it, and initially we just come back down. So yeah, it can't be wicked through. It has to be a candle above the high that you've marked out, or the low. It has to be a candle close above the high that you've marked out, or a candle close below the low that you've marked out. And remember, you only need 2 candles to determine a high or a low. So yeah, thanks for watching.